Welcome to our new month of new month of Mortgage Express. And in honor of Memorial Day and all of the veterans and everybody that we, love to help, we are going to go over VA qualifications and what a VA loan does and kind of dig into VA loans.
Yeah.
I'm Dawn Hall.
I'm Mallory Fraser.
And we are your team, your Mortgage Express team. So we are going to start out. So I want to start out with what is a VA loan? Let's understand the basics. And we're going to kind of touch on things. We're not going to kind of get too deep into stuff. If you have questions, you can always put them in the chat and we can answer them at the end. Or you can always give us a call, either one.
Yeah, I feel like the VA loans are very tailored to who it is.
Absolutely.
Those are
obviously you have to be either an active duty service member or somebody who is discharged from the military. And again, you have to have your DD 214 and your certificate of eligibility to let us know that. So we can do that for active service members. Coast Guards, those are considered active service members, all of that. So let's touch on a little bit. They are backed by the U.S. government and the Department of Veterans Affairs. Now, granted, they don't approve or deny the loan. We do that, but we do go based on their guidelines and what we have to do with automated underwriting and different things like that.
Just like in the FHA, just because it's backed by the government.
So we have to, go by their guidelines. Correct. And again, it is designed for eligible veterans and active duty service members. And again, an eligible member would be somebody who served and was not was honorably discharged, all of that. So, and they usually go over all of that information with the veteran when they are getting out. A lot of times we get some active duty service members that aren't quite sure because they haven't gone over all of their benefits yet because they haven't left the service. So, but you can use it if you're active duty. There's no down payment required. Most cases, I don't even know really of a time when you would have to put a down payment down because now VA does not have a loan limit. They used to have a loan limit. They don't. So if you qualify for a super big mortgage and you want one, you can, as long as you have the eligibility available, and we're going to get into why you might not have it. But if you have your eligibility in there, you can get pretty much whatever house you want. There are a little more flexible guidelines. And when we say flexible, they don't look at your front end ratio and your back end ratio. For housing, with most mortgages, you have a housing ratio, which is your whole housing payment divided by your income. And then you have a total monthly payment, which is all of your payments. VA uses one. It's just the total. So you could have your whole house payment be your whole VA loan. Whereas in other like FHA or conventional, you can't. So in FHA and conventional, if it's 50% on the back end, you cannot have a housing payment of 50%. You can only have a housing payment of like 42 to 46. So it's a little different that way. And another caveat is it can only be on a primary home. And I'll even go further with one more caveat. You cannot have a co-signer unless you are married to that person. So it cannot be your fiance. I've had several people who got married and then had their wedding later just so that they could get the VA loan. It cannot be your parents or anything co-signing to help you. It has to be your married spouse. But there is another little thing. If you are the wife of a deceased veteran, you can use it as well.
Correct. That's where we say, like, let's figure that out first because it tailors to different people.
Correct.
How that is.
Correct.
So kind of talking about the top advantages of a VA loan, which, zero down payment is probably the most attractive one.
Exactly.
One that people look at and which I most of the time utilize the most is say, let's just put 0% down. Don't worry about anything coming out of, mostly anything coming out of your pocket. You still have closing costs and everything, but we'll go into that one. And you don't have a PMI. So when you have your conventional and your FHA where you're putting low money down, FHA, you get it for the lifetime of the loan. Conventional, when you get to the 20% of equity into your home, VA, you have nothing.
You have no PMI,
No
which is
PMI,
great.
which is
And that gives you more
very, very
buying
low.
power as well
Yes.
versus an FHA or a conventional.
Yes, and a lot of them with also that is a really good advantage is your interest rates, which are usually
A little
a
lower.
little bit lower. So you guys definitely get to lock that in, which is great. But I mean, you guys deserve it. You guys
Yeah,
fought for
absolutely.
us, but this is a good thing of why this is for you. That we say any veteran that you have. I've gotten some people who are like, wait, I can do a VA loan, and I haven't used it yet. And I said, haven't you used it? Like it's
Let's
great.
use it now.
Yeah, let's use it now. And then like Dawn was saying earlier, that you can use you can have like a higher debt to income. It's more flexible for you. It's a
Right.
little bit more, it's just better for you.
Mhm.
Limited closing costs for the veterans, and then your assumable loan options available, which are not really.
They're assumable, but you always, here's the thing with an assumable, whether it's
Yeah.
FHA or VA, you can assume that loan, but maybe that person
Yep.
had it for 10 or 12 years
Correct.
and their loan's only 100,000, but they're purchasing a $400,000 house.
Correct.
That means you gotta put $300,000 down.
So
So
it
sometimes,
goes back and forth
yeah,
on that
sometimes
one.
it works, sometimes
It-
but
It's available.
But what I do want to say about the closing costs, with zero down with a VA loan, your your seller can pay up to 6% of
You
closing
still get
costs,
seller credits if you want to.
right, which could cover everything.
You could
whether
not put
it's-
no money down.
Exactly, you could get, and actually I've seen VA get money back because
Mhm.
you pay for your appraisal up front.
Mhm.
Sometimes you pay for flood insurance and all that
Absolutely.
up front. And when you do that, that can still be credited back to you
Yeah.
at closing.
Yeah,
So
your insurance
you
is
could actually
included.
get your money back as long as you've got credits from the seller. So you could buy a house theoretically with
With no
nothing
money.
out of your pocket.
Out of
Very
VA.
cool.
I
On a
love
VA,
it.
absolutely. If I could turn this page.
Why does it matter?
Why it matters? Well, you know, the amount that the VA guarantees to your lender is all of your loan. And again, with an FHA loan, when you're guaranteed that loan, that means you're paying mortgage insurance and all of that.
Right.
VA, you don't. So their VA is guaranteeing your loan. Now, that doesn't mean that if you default, they're not going to come after you. But what it means is the VA is going to pay the money to the lender,
Absolutely.
and then the VA is going to come after you. And then
Yes.
that's when you owe the government money, which you don't really want to do that. There, again, no loan limits in most cases if you have full VA eligibility. Now, when I had talked about sometimes other when you don't, if you've used your VA before, you might have different eligibility if you didn't pay that house off, or if somebody assumed your house.
Yeah.
If somebody assumed your VA loan, then that part of your eligibility is not released. And if that person, I just remember this, if that person defaults on your loan, that's on your eligibility as well. So you want to be careful with that. It can be used up to multiple times,
Yep.
which we were saying, say you buy a house, you know, and you're in it for 10 years and it's your starter home or something, and you want to buy a bigger house because now you have an expanded family or something like that. You can use that again, even without selling that VA home, as long as you have enough eligibility. And we find that out by sending it to, you know, to the VA to get that eligibility certificate to tell us how much eligibility you had.
Actually, my sister-in-law used that when they moved down. They had a house.
I helped them.
Yeah, they had a house. That was before I had gotten here.
That's right.
And could help out, but they moved down from where he was based and got done, and then that house was a VA, and then they switched to this one, and they used their eligibility. It was great.
It was great. Yep. And one of the last things too is once you sell your home and all of that, your VA eligibility is restored. So again, sometimes people think if I've already used my eligibility, I
Does
can't
it
use
stay
it
that
again.
way? Yeah.
No, you can
Like,
use
hey,
it
I've used
over and over.
30%, is it gonna be 70%? No, it goes right
Right
back to the full,
correct.
to the full amount that you have.
Exactly, exactly. So tell us some strategies, Mal.
Well, like we've kind of gone back with is that you can just buy with little or no money down. And I think that's our biggest, that's our biggest one that you want to go with, is because it's great. I mean, who really wants to be putting money down or spending any money out of pocket while buying a house? And
If
then
you don't
can.
have to.
And then if you do qualify for a bigger loan or a bigger house and you can put no money down, I'd be like, hey,
yeah,
sign me up for it. So that way you can actually preserve. So when you're putting little money down to no money down, you're saving that money for investments or reserves or anything that you want to be able to move into.
Yeah.
Now I kind of just learned about this one where it was like you can split for multiple properties, because I had no idea, but that one was a little different for me, because I remember learning and being like, you can only have a primary. But when we were talking about it, how if you have a house for over, say, 15 years and you're like, hey, I'm moving to Florida. I'm coming to Florida. We're retiring. I want a smaller place. Can I still can I still do a VA loan? Absolutely, you can.
If you have the
If you have the intent.
Yeah.
Yes. So that's where eligibility for it. So that's where, because again, if you're in that house for 15 years and you don't do anything else, buy anything or move anything else, and you're downsizing, they're not gonna say no. They're not, because it's been there. Yeah. And then also you can use it for multi-unit, for like maybe a duplex. Maybe you can live on one side, rent the other side out.
And condos, you can do it for condos as well.
Condos, you can do it, and those we have tips and tricks of, because in Florida they have non-warrantable condos, and condos can be just a pain in the booty, but we have ways that we can get it to work. But that's also, again, a case by case scenario. Correct. We don't want you to think it's all the same. And then also you can use the remaining entitlement for future purchases. Purchases. I know, I'm like tongue tied. It's the weirdest thing lately. But then it's just so much benefits for VA that you can use over time. I mean, you guys deserve it. You guys got it, and it's great. And again, the assumable VA loans, we'll kind of like touch on that if you want to. Again, if anything,
you just have to be careful with the VA, and it depends on the loan. It just depends on how long you've had it. What does the person qualify for assumable?
Right.
And then again, the biggest thing you have to watch is and remember is if you don't. If they default, then it comes back to you. So you just want to make sure that
it's available, but just tiptoe around that one. Tiptoe around that one.
So a little bit, again, we've touched on a lot of this, but we're going to keep kind of going over it so that you understand some of the good things that the loan has. No PMI, as Mallory said earlier. As you know, on most loans, when you put less than 20% down, whether it's a conventional loan, whether it's an FHA loan, you would have mortgage insurance or mortgage insurance premium considered for FHA. VA does not. You do not. And that's a huge savings, because on a house of like a $350,000 house, if you're putting minimum down, like on an FHA, that could cost you like $200, almost $200 a month in mortgage insurance. Whereas you're not having to pay that. So that's great. You have lower upfront cash needed. Obviously, we keep saying zero money down. Zero down.
Say I don't want to put anything down.
Correct. Cool. No money down. The credit qualifying is a little more forgivable. And the reason I say that too is we do have what's called manual underwriting on VAs as well. So if you don't get what we call an automated approval, which we always hope we get, because that just makes things easier and flow quicker. But we can do a manual, and there are you know, our underwriters are fabulous here at Van Dyke. We can
They're
pick up the phone and call them and we can say, will this scenario work? And they'll say, sometimes they'll say no, but then they'll say, try this.
Yep.
Or do this. So there are some forgivable guidelines or gray guidelines that our underwriters are very good at. There is a residual income requirement, which helps with your stability. And I getting into residual income, it's a whole calculation. Just don't worry about it. We worry about it on
No,
the
we'll
back
worry
end.
about it.
But residual income is basically meaning that of the income you make, that they know you're gonna have enough to, so this is not gonna be sticker shock or payment shock,
Correct.
and you're not gonna be able to afford it. They wanna make sure you can, so you don't
Mhm.
lose your home. And seller concessions are allowed, so you can do that as well. It can pay up to a certain 4%.
Mhm.
And again, so there are other times where they can also pay discount points and to buy
Absolutely.
the rate down, which is not considered a closing cost
Nope.
for VA, which is very, you know, very cool. Can do
Absolutely.
stuff like that. And again, the seller can pay all of it. Seller can pay some of your debts off if you need to for VA. VA, if it says, oh,
I was like, I just want to think about that.
well, it's crazy because
Yeah.
if you have somebody who maybe needs to pay off this $2,000 credit card because they pay $200 a
Mhm.
month and they don't qualify, if the seller puts in that they're gonna pay 4% towards closing costs or whatever, or 4 is gonna pay 4%. See, when we have realtors write that, we have them write it a little different. It doesn't have to say closing costs or be specific like
Say-
FHA. Just say seller is gonna contribute 4%
That's it.
toward the buyer. That
To
can
the
be
buyer.
used for anything.
Anything. Yep.
Paying off that debt, whatever, paying
Correct.
off, you know, anything. And it's really crazy what they can do with it.
Mhm.
And it is government backed, so that's another reason why we don't have a lot of PMI. I know FHA is
Right.
government backed as well, but it's only a portion of the loan, which is why you still have to pay mortgage
Yes.
insurance. VA covers the whole thing.
Exactly.
And if you default, then they pay the lender, so we don't get stuck
Correct.
that way.
Mhm.
There was one other thing I was trying to remember, but I can't. If I remember it as we go forward, I'll say it again.
They'll come back to you, you
I
probably
know, I'm
always.
getting
Right?
old, I forget.
So a lot of misconceptions with a VA loan is, I mean, it could be a number of things. The top ones that we tend to hear
Yeah.
is the VA loans take too long, which they don't.
They don't.
They don't. It closes in a normal amount of time. Again, the only times we ever see issues is mostly for condos because
Takes a while to
it takes a while to
get
get the con, and
information.
most of the time it's the condos. But again, with VA, we cannot rush them and reach out to them.
Right.
We cannot do that because
But
the
VA does allow us, if something
Yep.
happens like on an appraisal or something like that, we can send and ask for a review.
absolutely.
So there's a lot of things that
We can have
VA
the
will do.
borrower
Yeah,
have reach out because it's
and- or
their
the
benefits. It's
correct.
not ours, it's theirs, so they can do it. There's
Yeah.
many ways of getting around it, but most of the time it takes
a little
our
bit, yeah.
normal process of 30
Right.
days. We try to do 30 days.
And again, it's kind of like any other loan too, is our third, we know what we can close, but if a third party, like an appraiser takes a long time,
Yep.
or the title company takes forever,
Correct.
we don't have control over that. We push them a lot, but then
Yep.
we bring you and your realtor in to
Absolutely.
help push that.
So another one is you have to have perfect credit for the VA, for a VA loan. You don't. You don't. Now, again, do they look at the credit? Absolutely. But you can have lower credit and still be able to get a VA loan because it's your benefits. That's what you are entitled to.
Right.
And then, like we were talking about, you can only use it once. No, you don't have to use it just once. If you use it for a house, you end up having to move. A lot of active duty members that do it are stationed somewhere and then they buy the house and they're like, oh, now we gotta move.
Right.
Great. You can use it when it sells, it gets puts right back into it. So it doesn't,
Or you can use it without selling
Or
it,
without selling
as
it,
long as you
yeah.
have the eligibility available. Yeah.
yes, but you can use it more than once. It's not just
Right.
one and done, and that's it. No. And that's actually a very, very common misconception on that one.
Right, right.
VA appraisals are difficult.
Yeah, no,
No, they're
not
not.
any more than anybody else.
Not any different.
You know, and I could kind of answer this one a little
Yeah.
bit. Back years ago, I've been doing this for a long time. And many, many years ago, prior to 2008, we could pick our own appraisers.
Yes.
But we're not allowed to do that
No,
anymore. But
no.
back then, there were VA appraisers that were horrible and horrible
Yeah.
to work with and hard to work with and always came in low or didn't do this or didn't do that. But see
Correct.
now, there are a lot of people that are VA,
Mhm.
approved appraisers. And they're easy to work with, same as any other
Yep,
appraisal. So
absolutely.
it's not really any more difficult either way.
Right. And then another one is if you must be a first time home buyer. No, you don't. No, you don't. You can, again, just like before, you can use it more than once. You don't have to use it.
It has to be your
over.
primary
And
home,
that's where,
but it
that's
does
where,
not have to be a first time.
I think that's where everybody
They
gets
confuse
with it, where they're like, but I'm not a first time home buyer. Doesn't matter. Are you buying a new primary? Are you moving somewhere? Are you going?
Right.
Are you downsizing again? Or are you looking to find a bigger place for you and your family? That is what they mean by
Right.
needs to be your primary home.
So the next thing we're going to kind of touch on a little bit is, and I always don't get enough R's in this one. VA IRRL is what we call it, and it's a VAIRRRL, a VA. What is it? What's the first one?
I can't even. I couldn't.
I can't even
That's the
remember what the
acronym.
I.
I just was like,
Nope.
Absolutely not. All I know
It's
is that it's
basically-
refinancing. That's about an
Right,
easy
it's
way to
a
refinance.
rollover, blah, 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 whatever. It's basically a VA refinance.
Yes.
Exactly. And what it does is it talks about using your entitlement, and basically on a VA loan, as long as you don't include anything like closing costs or anything, or try to roll anything into your mortgage,
Mhm.
you don't have to qualify anymore. As long as we're lowering your rate, you are good to go. We
Mhm.
don't do appraisals. There's no appraisal. As long as we are, and I'm looking at my little bubbles here. As long as we're reducing your mortgage payment and we are changing from either an adjustable to a fixed
Mhm.
rate. A lot of it is, if you think in your head, as long as it's doing you better on a better mortgage, we can do it. And again,
Well, you qualify for the streamline.
right, no, it is a streamlined refinance where you don't have to have anything.
Correct.
And that's one of the few things. FHA has a streamline or a modification, which is similar, but the VA, nothing. You don't owe anything. We don't do anything. They don't
Nothing.
look at your credit. They don't look at how much your house is appraised at.
Don't care.
Nothing.
Nothing.
As long as it's putting you in a better position, they're doing it. So the last thing we like to talk about is, how do we help you with a VA loan? So if you call us to talk about it, or if you have a VA loan and you have questions, we want to educate you. We want to make sure you know what you're eligible for. Why, if something comes back and you're not eligible for, we dig deep to find out why, what happened, that kind of thing. So we like to educate you.
Absolutely. We like to try to figure out how we can structure this to fit your life. We want to make sure that we're not going to,
And how you want to do your
how you want
finances.
to how you want to do your finances. Yes, if you want to keep your monthly mortgage down, we'll figure out how to do that. We can do, kind of seeing, do you want to get into a bigger house? Do you want to get into a smaller house? What can we do to help you?
Help you.
Figure that structure
Yeah.
that out for you.
Exactly. We can also work with helping you reinstate your entitlement or reuse it. We have had, not a lot, but we've had a few people that have come and they want to buy a house and they want to use their VA, and they don't know why it's not at full VA entitlement. They have no idea, and then come to find out, maybe they sold a home. I had one guy 20 years ago, and for whatever reason, it was not noted that the house had ever sold. And again, I had one that the VA loan was assumed. Again, going back to that assumable mortgage, that it was never recorded that the people sold that house, so he
Right.
didn't get his eligibility back. And then we just had to have, go follow the little breadcrumbs to get to the end
Yeah.
and find out what was wrong. So we do like to help you, restore it and use your entitlement again if need be.
Yeah, I mean, we like to compare, your purchase options of what we can do. If you're like, hey, like, I don't know if I want to use my VA loan, and we'll show you, like, hey, if you wanted to go conventional, this is what it's going to look like. Hey, if you want to go VA, this is what it's going to look like. And the same thing with refinance. If you already have a VA loan and you're like, hey, I need this to go down, I need my interest rate to go down, I need my mortgage payment to go down, we're more than happy to look those up for you and kind of put you on a side by side comparison of like,
Exactly.
hey, look at this is what, and everything is free of charge. You're no obligation to anything. Just send us in your current mortgage statement. We'll be more than happy just kind of plug numbers in and be like, hey, we can get you over to here. How does this look for you?
Right.
And if it's not, then great. If you are qualified for the VA Earl Streamline, then we can do it that way too, where it will be even easier.
Even easier. Right, right. And again, talking about ease, we like to simplify everything, make it as easy as we can for you. We try to do that on any loan that we
Anyone,
do.
yes.
But we do understand as well that this is one of the biggest purchases you'll ever make in your
Absolutely.
life. It's very stressful. It can be very stressful on you, on your family, on your finances.
Right.
So
Yep.
we're here to make that a little less stressful and to help you run through it and all of that.
Yeah,
So
and playing off of that, we just want you to focus on, we want to help you focus on your long-term financial goals of making sure that this is what is going to be good for you. This is not going to hurt you down in the end of the day.
right, right.
As well, because you guys have gone through a lot for us, so that's
we
it's at
do
least we
appreciate-
can do for you,
Yeah, we do appreciate everything that our veterans and
Absolutely.
our active duty service members do for us, and we always want to help you. So
Yes,
call us if
absolutely.
you need anything. We thank you for taking time out of your day. I don't know, do we have any questions or anything? Nope.
No,
So
not today.
but not today.
Simple.
So it sounds like everybody kind of knows, but if you don't, give us a call. Dawn Hall,
Mally Fraser.
I'm your lender for life.
Woo! Happy Memorial Day.